6 steps to save massively on tax in 2026. If you're like me and you like planning early, but you don't really know where to start, I'm going to give you 6 things that you can do in under an hour that will set you up for success and help you save massive amounts on taxes here in 2026 in the coming year. Hi, my name is Zachary Jensen. I'm the managing partner here at TaxWise Financial Services, where we're empowering small business owners with tax savings so they can grow with confidence. In today's video, we're going to go over the 6 easy steps you can do to save massively on taxes for 2026. You can get them all done in the next few days. Let's start off with number 1, which is the obvious one, right? Maxing out retirement accounts early and correctly, just because this is part of the basics, right? And basics really matter. Review your IRA, Roth IRA, or solo 401k current plans. If you don't have any of that stuff, be sure to talk to your advisor and figure out which one's the right for you. The limitations have gone up for IRAs. It's going from $7,000 for last year up to $7,500, and for 401ks, solo 401k, it's going to go up from that $23,500 to $24,500. You get an extra $1,000. That's per spouse. So you really need to be thinking about this stuff. If you can set aside some money now, or at least set aside a cadence per paycheck and update that throughout the year, that's going to put you in a massive spot for success. Number 2 is roughly projecting out this year's income and how much spending you're going to need, even if it's ugly. So what I do is I just look at throughout the year how much money I'm expecting to make, and then I pre-set aside money that I can invest. So I'd highly recommend that you do something like this. Take a look at your W-2s, Schedule C, K-1s, any interest you got through the last year's dividends, and see how much income you made roughly last year. If it's not going to change, then you could reasonably expect that's how much you'll need. And then you can back into it. Hey, I'm going to spend this amount of money on my living expenses in my life, but then I'm also going to set aside this amount of money to invest. And that's going to set you up for success to keep growing and growing. And it'll show you how much money you have left as dry powder. So that way you can use that to defend yourself against high taxes. In that same vein, the third step is going to be deciding which asset class you're open to buying this year. So if you're, let's say, left with $50,000 or $100,000 or something like this, right? Well, you can then take that money and then use that to go buy assets that can create tax advantages for you. So the best one, the best example that comes to mind is real estate, because everyone can understand real estate, right? But this could be expanding your business, buying a piece of equipment, buying a vehicle. There's a lot of other ones as well, but real estate's a great example here. If we take that 50,000, let's say we go buy a $250,000 property, or that'll put 20% down. That's 50,000 into the $250,000 property, and then we can then do a cost segregation on that. People in California are looking at me like, Zach, you're crazy. There's no $250,000 properties anywhere, but in some places there are. So that leads to step number 4, backing into how much tax shelter you probably need. So in that same example, let's say that $250,000 property gets us $60,000 depreciation or something like this. Well, that'll allow us to write off that entire $50,000 we spent as effectively a loss. And again, I'm skipping around here, but that'll allow us to, in this example, let's say we had $120,000 or $150,000 in income. Instead of spending taxes on that full $150,000, we had the $50,000 loss, and now we're only paying taxes on $100,000. So you're going to pay tens of thousands of dollars less. So that's estimating how much tax shelter you're probably going to need. Obviously, everyone wants to write off their entire income, but realistically, that's not the case for most people. So just estimating out, okay, roughly how much income do I need to shelter, and how realistic is going to help you make some more high quality financial decisions this year. Right now is also a great time to review your entity structure and payroll structure and owner compensation structure. So if you're not a high W-2 or 1099 folk, this is just for the S Corps and business owner people listening. Take a look at your payroll, make sure that you meet the reasonable compensation tests. There's no real test for it, but you don't want to be paying yourself an egregiously low amount. So talk with your accountant if you feel like you might fall into this bucket to make sure that it's okay. But yeah, take a look at your benefits, payroll cadences, and then just make sure you're doing your solo 401k and matching properly. That's, again, going back to step 1, one of the basics, and something that's super important, and fixing it in January makes it all clean and boring for the rest of the year, which is exactly what you want, right? You want to make sure that you can take care of this stuff now, and that way focus on your business for the rest of the year. And then number 6 is setting some periodic check-ins. So we at TaxWise require all of our clients to do a check-in in the middle of the year for mid-year planning, right? We've got enough history to see how much income you've had and what we're expecting it to be. And then we can go through all these steps and help you advise you on your specific situation, or and doing one at the end of the year. So we do mid-year and end of year, but you can set up more check-ins if depending on your needs. But I'd recommend you set up at least, hey, put a reminder on your phone to check back on this stuff, because taxes are easy to forget. So put a reminder on your phone for in 6 months from now. Hey, I'm going to check in, see how my plan's going. Was I actually going to invest in real estate? Do I have the money I thought I was going to have? And just make sure you're making an honest conversation with yourself, so that way, by the time this year ends, you'll be able to set yourself up for success, and you won't be trying to get in last minute and trying to find tax savings last minute. So if you think this plan's useful, please feel free to steal it, right? This is something we step through for all of our clients. And if you have additional questions about your specific situation, feel free to reach out to us. My contact information is in the description below. Thanks so much for watching, and have a great day.